Hi, this is David Skarica, and again, we're joining you with our series of interviews with small cap opportunities. And today we have Brett Richards from GoldShore. The ticker is GSHR on the TSX. So I'm going to keep the introduction short. Brett's going to tell you a bit about himself, about the deal, their plans for drilling this year. And one thing I can tell you, because I know I have a lot of technical traders and chartists who follow my service, the thing that makes GoldShore unique, just to start off from a technical point of view, you'll see this is actually a very liquid trading junior. Like today, as I'm talking on January 10th, around 1 p.m. Eastern, the stock's traded 500,000 shares. So for a lot of you who tend to be want some liquidity in some of these things, this stock already has some nice liquidity from an investing and trading standpoint. So Brett, thanks for being here. And if just get us into the company. Tell us a bit about yourself, your properties, and what your plans are for this year.
Dave, yeah, thanks for having me on. I really appreciate it. For those who don't know GoldShore, I'll give you kind of a little bit of background. And please go to our website for the forward-looking statement and disclaimers. But we acquired Moss Lake in 2021, and we listed in June of 2021. And since that time, we have raised over $55 million in support of understanding what this deposit is, but also defining it. Moss Lake is a very big land package. There is a resource at Moss Lake. There was a historical resource at Moss Lake of around 4 million ounces. And that was split between two areas of Moss Lake and East Coldstream. So over the past 18 months, we have been active in a 100,000 meter drill program. We're at about 78,000 meters today, but we felt there was enough data to put out a maiden resource, and we did that on November 15th. And the resource delivered 4.17 million ounces of gold at 1.1 grams, and contained within that is really the story. The story is contained in that 4 million ounces is 2.2 million ounces of higher grade material at 2 grams. So this is what our focus has been over the last 6 months in understanding and developing the high grade. And I'll talk about that in a second. But the real takeaway from about GoldShore is really about the size and the scale and potential, but also the grade and the accessibility to infrastructure. So I'm going to touch on all these points in a second, but let me tell you a little bit about myself. I've been in this business over 35 years. I cut my teeth at Kinross early on in my career and was one of the founders of Katanga Mining. We did our shareholders 86 times money. The initial shareholders at Katanga, we took a $25 million company and exited for $1.8 billion to Glencore in 4 years. I was also the CEO of Rox Gold, and also the CEO of Avocet, which was a London-listed gold company. When I got introduced to this opportunity, I brought in my VP of exploration, who's been with me for 15 years, Pete Flindell. I asked Pete to look at this property, and he said, Brett, after 8 hours of assessment, he said, we want to run this. So we made overtures to those on our board and advisory board who were architecting this, and Galen McNamara and David Garofalo, and we put together our argument for what our strategy was going to be in running this company. So let's talk a little bit about Moss Lake. We're 100 kilometers west of Thunder Bay. We have a large endowment. We have a large land package. And we are in the Shabandawan Greenstone Belt in northwestern Ontario. But we have 10-cent kilowatt-hour power on our site. We have the trans-provincial Hydro One lines on our site. We're 100 kilometers away from an international port. We have CN and CP rail on our site, and we are on the Trans-Canada Highway, Yonge Street in Toronto. And if you follow that for 1,890 kilometers, you'll be at our site. So we have every piece of accessible infrastructure to build a big district-scale mining camp. And we have a large land package with a huge endowment on it. So let's talk a little bit about the endowment in a second. We have our share price today is around 25 cents, $36 million market cap, extremely undervalued on a per ounce basis. When you start looking at how our peers are valued, how we are valued, And although we have very active trading, we had 1 million shares trade 2 days ago, 580,000 today. There's a lot of liquidity in our stock, but the value hasn't been bedded in yet. We're trading at $9 an ounce. We're trading at $16 an ounce for high grade as compared to our peers in the same kind of 2 gram or 1.7 to 2 gram category. They're trading at $90. So we have a big calibration and a big re-rate to get up to our peers and up to our high grade peers as well. So I see a lot of upside potential in our stock just in the re-rating. It has nothing to do with the catalyst we're going to talk about in a second, but just in the re-rating itself. And you look at the active projects that are in production or near production, and we all know the names Detour and Rainy River and Cote Lake, etc. They're all around 1 gram. And we have a 2 gram ore body that we think that we're going to be able to sequence into a mine plan in a PEA up front and bring that grade forward. And that's going to deliver tremendous economics. Another piece of our business is our commitment to ESG. We have signed 2 exploration agreements in 2022 with 2 of our host community First Nations, and we have been taking baseline environmental data. We have an ongoing study with an Indigenous affiliated consultant. They're doing our baseline study for permitting, and we have 2 years of information now. So we've been doing that consistently to speed up and shorten the permit process. Early on, when we got this property back in 2021, we flew a VTEM mag survey over the entire property because there are a number of targets here, both gold, silver, but we also have a historic copper mine on our property, and we wanted to see if there was any geophysical signatures similar to that, and there are. But early on in our drill program, after about 30 or 35,000 meters, we started to hit really high grade intercepts, like 6 grams over 56 meters and 5 grams over 16 meters. And we put all these drill results out last year. And David, if you remember, the geopolitical environment, the risk-off mentality of investors last year, and there was a flight to liquidity. Everybody was panicking in April, May, June, July, and all the way through to Christmas, really. And there simply was no market, and people were selling into an illiquid market, and it hammered our share price, as it did all the juniors at the end of the day. We put out a drill hole like 6.3 grams over 56 meters. We trade 1 million shares, and our share price goes down 2 cents. You put that out today, like for a good example is Red Pine put out a very similar hole, a little lower grade, but they put it out and their share price goes up 45% in 1 day and stays there. So this is the different dynamic in the macro we're seeing, but we have a number of catalysts coming forward that I'm really excited about for 2023. This is this high grade domain I talk about. This is how we're going to sequence a starter pit within this big global low grade halo of a resource. And it trends subvertical, so this goes down quite deep, and there will be an underground potential here down the road. Our focus is going to be on open pit near surface because there's very little strip, very little overburden, and our focus is going to be on sequencing the higher grade material through open pits. 11 kilometers away is East Coldstream, and we have a very similar geophysical setting there as well, with these high grade shear domains contained within a large global resource. This is not part of the resource we put out on November 15th. The 4 million ounces is strictly here at Moss Lake. This is 850,000 ounces of historic resource, but we are doing a secondary mineral resource update in April of this year, and you're going to see this come as a current resource. Here is another kind of anomaly about GoldShore. We have a historic mine on our property that's been decommissioned. It's called North Coldstream. It operated for about 20 years back in the 60s and 70s, and they made a copper gold concentrate. And this is a VMS style deposit, and we drilled it earlier this year, and it's exciting. We got 62.8 meters at 0.88% copper equivalent with great cobalt credits, 0.08, 0.07% cobalt. This is really exciting. And I'd love to prioritize some more drill holes because we found this at surface. This could be a really exciting battery minerals, EV kind of play, but we need to prioritize this into our sequence. Moss Lake is our priority.
Yeah.
Building a project around Moss Lake is our priority, but what great optionality here. This was our resource. After we did the resource update, it now looks like this, and you can see the high grade shear zones and the secondary shear zone that's emitting down here from the southwest. You can see where our high grade is positioned in our peer group. It is the highest grade. We hope to have one of the highest grade development projects in Canada, and that's what we're working on. And our global resource falls in around that Malartic, and we expect it to be a little bit more towards the Rainy River, Cote Lakes in the future as we expand the global resource. This is the pit shell that contains the resource. We use very conservative estimates here, $1,500 gold price for pit shell constraints, and very, very conservative estimates. We used what the majors use. We want them to compare us as they would evaluate projects themselves. We think it's prudent. Other juniors use 1,700, 1,800. We're using 1,500. We're being conservative. And this is a cross section of the pit, and you can see these high grade shears go down at depth. So we have 4.17 million ounces over 3.5 kilometers here. And we have mineralized holes exactly like we have at Moss Lake to the northeast. And you can see all those little orange dots there. They're all mineralized holes that didn't make it into the resource. So as we step this out over time, this pit's going to grow another 3 or 4 kilometers, going to grow another 3 or 4 kilometers to the southwest, and probably going to grow by a couple of kilometers laterally. And maybe down into this area where we have a number of really high grade hits as well. So the exciting potential about all this really makes it a district scale play. But what we're trying to focus on, David, is we're trying to just put a project together that the market can digest. This is going to be a PEA that we're going to do starting after the MRE. So we're doing an updated resource in Q1. We're going to get that out in April. As soon as that's done, we're going to do a PEA on it. And I expect the high level numbers to be around 400 million capex, around 140 or 50,000 ounce production profile. I would expect our all-in sustaining to be 1,000 or less. And that to me is $120 to $140 million free cash flow company. And this will give, when we get the PEA out there, this will give the market another valuation metric to look at. Development plays do 2 times cash flow. That's a 250 cap company. If you want to do a 0.3 discount on NPV, and the NPV of this project would be north of $700 million. That's a 220, 230 cap company. So again, we're sitting at $35 million today. There is tremendous upside and potential based on the catalysts we have coming, but also on a calibration to the market, to our peer group. So the market's being bad, and yes, we've been hammered like everyone else, but we have a lot of catch up to do just to our peer group, and then beyond that, we'll be driven by catalysts. So we have so many exciting things coming down the pipeline in 2023. Again, I go back to the team we put together understands the size and scale and potential, and we're in one of the lowest risk jurisdictions in the world. We're in Ontario. And we've got this copper and copper upside. We've got gold target upside, and we've got a really tight share structure that, as you've seen, we're trading 500,000 shares a day right now, and the share price has found a bit of traction. So really exciting investment proposition for new shareholders coming in.
Yeah, and just end off here. My experience is when you're kind of in a new bull cycle, I always want to be in companies that usually have a resource that can expand onto it to go into production, or new production, because those kind of tend to be the low hanging fruit in a new cycle. And I find that those deals out of the gate will, obviously because they are more advanced, so it's common sense, will do well, rather than getting something earlier staged.
Exactly right, David.
Okay, so thanks for joining us, and hopefully we'll have you back in a few months. Yeah, maybe when you put your assessment out in April, and to kind of talk about what's going to be happening then going forward.
Absolutely. Look forward to it.
Okay, thank you very much.
Thanks, David.